Well, good morning, everyone. I'm Debbie Gibson. I'm with the State Advisory Team with State Board of Accounts. First, before we begin, I've got a couple of housekeeping items that I need to go over with you. As noted in our invitation, this will be recorded. I will be posting it in a couple of days, and we'll also be providing kind of a timing segment with it, so that if you want to listen or re-listen to certain parts, that you can go ahead and get directly to those versus listening to everything. Or like we have a segment on grants, if you have some persons in your office that they want to hear about grants, you can get them directed to those. For those of you who are virtual, you'll note that you're muted and your camera's off. We do want to hear any questions that you have, but for this session, we ask that any questions that you send it to us at stateagencyadvisory@sboa.in.gov, and that's on your first slide down at the bottom there. And yes, the answer to the question is that the slides will be provided online at the same time that we give the recording out. For those in person, if you have any questions, please feel free and ask anytime. And of course, if you have any comments, questions, or just suggestions about how to do our presentations or any thoughts that you have just in general, please go ahead and send us an email for that. There we go. Again, we welcome you taking your time to attend today. We know that your time is valuable and wouldn't have invited you if we didn't think that this would add to your success in whatever position that you have. Our state examiner, Paul Joyce, has tasked us not just to perform audits, but to look for ways that will enable you to have successful audits that are not burdensome. As you can see, we perform over 4,000 state and local audits, and this all goes towards transparency and accountability that all of us as public servants feel called to do. But accountability is not just exposure, it's about building a culture of responsibility. And in order to do that, you have to have the right tools. The State Assignments Audit Team and State Advisory Services Team work together to provide independent services to you that are part of those tools, whether offering opinions on your financial statements or providing advice for things like your internal controls. Today's presentations are offered to help support that. You will have the audit team providing you a look back on the most recent financial and federal audits, providing their perspectives of what may help you for future audits. And I know some of the smaller agencies are thinking, but we're never really involved in audits, and you are part of the population. And so hearing what's going on is very, very beneficial and helpful for you. We're also going to have a presentation by State Advisory Services that will talk about what happened last year and what is going on this year. Some of the tools, as well as some of the tools that have been developed to help you with your accountability tasks. So with saying that, I will turn this over to David Parker now, who is the coordinator for the State Assignments Audit Team.
So, like Debbie said, my name is David Parker. I'm the State Audits Coordinator, so I oversee what we refer to as our State Assignments Team. That team's made up of about 23 individuals. We have 2 ACFR managers and 3 federal managers, and the remaining is all field examiners, staff that actually perform the work on various audits. And so I kind of want to start off for some of if there's anyone new to state government, or just kind of a refresher of what me and my team do. So On an annual basis, we perform the state single audit. This is made up of the Annual Comprehensive Financial Report, or ACFR, and including the CFA, and the Federal Major Program Audits. And so this is our biggest audit. We focus most of our time and effort on this, but we also then perform some compliance engagements and other various smaller projects in between doing this state single audit. Typically, we start performing procedures for the state single audit late spring, summer. And so a lot of the agencies have probably already received questionnaires, at least for the ACFR side and some of the federal programs, of just starting to gain understanding of internal controls, see if there's any updated policies from the prior year, those types of procedures right now in the interim. Just kind of a perspective on the ACFR and federal. So just looking back at fiscal year 24, the government activities revenue was around 51.5 billion for the year. And so that encompasses all state agencies. So like Debbie had said, even if you don't necessarily get a direct request from us, you're involved in this audit. And just for the CFA, the expenses were $22.6 billion in fiscal year 24. So we're auditing these figures that encompasses the entire state. And so later in the presentation, I'm going to kind of go over how we select things that we audit and some tips on how you can gain efficiencies and how you can make the audit process smoother. But before we move on, I just want to point out some of the due dates and time frames. So the ACFR is due 6 months after fiscal year end, which is December 31st. The federal major program audit then is due 9 months after fiscal year end, which is March 31st. And so those deadlines are important, discussing some of the other items further in the presentation, but that is when the actual reports are due. So most of the deadlines you'll see from our staff are going to be before this time frame, and that's important to keep on pace so we have enough time to actually submit these reports no later than those days there. Okay, so first I'm going to start about how we audit the ACFR. So like I had mentioned before, we have already started with gaining an understanding of agency procedures relating to internal controls. So this is kind of the vital piece that we start with. It's making sure that we gain the understanding of each area that's applicable, and we document the internal controls that the agencies have put in place that then we will test and rely on. One of the important things going back to the time frame is the way the state ACFR functions, we audit as it's being compiled. So what that means is final financial statements usually come mid-December. And so with the due date at the end of December, that would only give us 2 weeks to finish an audit, which would not be feasible. So we audit as it's being compiled along the way. And so a very important step is the Office of State Comptroller will request information from various agencies to compile some of the areas of the ACFR. And I believe for fiscal year 25, that ACFR survey has already been sent out to agencies. So it's just very, very vital to make sure you are hitting those deadlines, because one setback at the beginning will create a ripple effect and just keep pushing multiple things back. Some of the common areas that we test on the ACFR are revenues, expenditures, capital assets, receivables, payables. These areas don't change year to year. And so we're requesting similar information each year on those. Some of those are easier, revenues, expenditures being in PeopleSoft. We're able to get some of that information from there, but some of the maybe AR, AP, we might have to reach out to your agency for specific documentation. We do randomly select items for most of those areas in our testing. Sample sizes depend on materiality. Without getting too deep into that, typically what you can expect to see for a test would be 40 to 80 items, which just means agencies with higher activity will have a higher likelihood of being selected when we do our random sampling. But it's important that all agencies are maintaining adequate records that will help minimize the impact to staff when we need to make requests. The last point is, depending on what information is in PeopleSoft, we may or may not have to make additional requests. So for example, expenses. For vouchers, that invoice is required to be uploaded in PeopleSoft, and we can go in and pull that invoice for our testing, including even journal entries. Usually Excel files are attached, kind of explaining what that entry is adjusting for a GL entry. But there are times that we need a little bit more information to maybe link some of those adjusting journals back to the original source. So again, just keep that information readily available really helps minimize the time delay of our requests and testing. And then something I don't have on the slide, but just want to mention for reference later, is you'll hear the term Section 2 finding. And what that refers to is any finding that's related to the financial statement audit. And that has to deal with our ACFR being a financial statement audit. If we have any issues in that, it will be what we refer to as a Section 2 finding in our audit report. So moving on to how we audit the federal major programs. So this all depends on the total state CFA amount for a given year. And that will give us the amount to determine the type A threshold. And so this is set by CFR 200.518. This is the standard that dictates how we pick the type A threshold and which programs are included in that, and how we determine if they're high risk or low risk. So for example, like I had mentioned, the CFA for last year was $22.6 billion. So referencing that CFR, anything over $20 billion, you have to take 0.0015% of the total CFA, and that amount is our type A threshold, which in this case was around $34 million. And so if a program expends more than $34 million in the fiscal year, it will fall in that type A threshold, which we'll have to then do some risk assessment to determine, is it going to be a low risk type A or a high risk type A? And so some things that will make it a high risk type A, if it's never been audited as a type A in the past, if it hasn't been audited for the last 2 years, or if there were prior findings related to that program. And so the key takeaway is that if it is a type A program and it's a clean audit, we can cycle that audit, which helps alleviate some of the stress from your agency that will have to be looking at that program. So it's really important to make sure any of the findings that we have on these programs are addressed as quickly as possible, and hopefully we can start cycling those audits. There is a little caveat to that. Even if it's type A, if the federal government has determined that it's a high-risk program, we have to look at it every year, no matter what. A good example is the Medicaid cluster. Then in addition to that, anything that falls below that type A threshold, there's a type B threshold as well. So I shouldn't say anything. There is a very small amount that even falls below the type B threshold that we won't have to necessarily look at. But for the type B threshold programs, those are evaluated on a much heavier risk-based approach. And the total number that we have to audit depends on how many low-risk type A programs were identified. So typically every 4 low-risk type A programs requires us to look at 1 type B program. And so, that usually accounts for around 3 to 4 type B programs that we look at in a given year. And in fiscal year 24, we had a total of 29 major programs that we had to do an audit on. And looking ahead, just some of the preliminary CFAs we ran, it's looking to be around the mid-20s to maybe the upper 20s again for fiscal year 25. And just like before, with the Section 2 related to the financial statement audit findings, for federal major programs, we refer to those findings as Section 3 findings. Next, I want to talk about the federal compliance supplement. So this is an audit guide that's put out by the federal government that we use to know which requirements we need to look at when we do an audit of a federal program. It's not a complete list of every requirement for that given program, but it specifically picks out certain compliance requirements that we need to test. And it gives us detail on any specifics that we need to look for. And I recommend that you get notification that you have a federal program that we will be auditing, to go out and find the most recent compliance supplement, which as of right now is still FY24, and just look at your program and kind of scroll through and see what type of documentation we're going to be requesting. There's a matrix in the beginning of this federal compliance supplement that will either have a yes or a no in the various columns for the different compliance requirements. And if it's a yes, then we'll need to at least evaluate, is it something that happens, is material process that happens at the state? And if so, we'll have to gain an understanding, test controls, and then test compliance. If it's a no, that doesn't mean you're not required to still adhere to those standards set by the feds. It's just that we are not required to perform an audit on that area, unless a material non-compliance is brought to our attention through our understandings of the other areas. And then, so if you want a good way to find this is you can just go into Google, and if you just search for the year and then federal compliance supplement, usually the first top result will be from a federal government website with a link to the supplement. So again, I think it's a great tool to help prepare agencies for when they get a federal audit to know what type of information we're going to be requesting. Okay, and then lastly, I'm just going to kind of talk about some general tips of how to prepare for an audit. And so some of these may seem obvious, but just maintain all supporting documentation and file it in an easily accessible manner. And then, especially when it comes to common areas that we look at, like I said, revenues, expenses, receivables, payables, capital assets, cash draws, query data for federal reports that we run. You know, all these type of things we'll be asking for support for. There are some of these items will be in PeopleSoft, like invoices for vouchers. But like I mentioned before, some of the journals may not give us all the necessary information. You might have that Excel file uploaded, but we may be looking to get back to the initial payment if you've done an adjustment. And if that's not clear, we'll have to ask on how to do that. Internal controls, make sure you keep tangible support. I know that our new moving towards an all digital age, not having those physical sign-offs anymore is fine, but if your control is you send an email saying this report has been approved, or you do some type of digital signature, however you want to document your control, just make sure there's something that we can see after the fact. Because unfortunately, if there isn't anything tangible, you say, no, I look at those reports and then I just give them back to the staff member and they submit them, but we don't see there's any evidence that you did review that. We can't say that control is actually in place.
David, could you elaborate a little bit on how you evaluate those controls with financial reporting and what role the deficiencies in that go with shaping your opinion on the findings?
Sure. So we audit, it's all on a risk-based approach, and control risk is a big component of that. So if we find that there's a deficiency in an internal control system, that just increases the risk, therefore increases the amount of items we have to sample. And depending on how big of a deficiency it is, it can lead to a Section 2 or Section 3 finding that appears in the public report. And then, of course, it's not always the case, but sometimes if there's poor controls, there may be non-compliance too. And with us having to sample more, we might find that non-compliance, which even could be question costs in the federal realm, a material adjustment needed for the ACFR. So it's just a good idea to have controls, even if we're not asking this audit area, but just kind of go back to your agency and look at everything you do and make sure that there's good internal controls that would either prevent errors or detect and correct those errors. Okay. And then the third point is when using some type of data, some type of PeopleSoft report, or however you get information to compile the various items needed for the audit, make sure to keep that documentation used. Common example we see is a federal report submitted. There'll be queries out of PeopleSoft that have to be ran. We'll rerun those queries, but maybe there was some type of adjustment needed, or the employee that did that left now that we're auditing, and you can't find that data. You can't get back to that original amount. That's why it's imperative to make sure that that is saved, where it's easily accessible, and that it supports the amount that you are submitting. Because when we do our testing, we will be asking for that backup. That goes for all the ACFR compilations too. And then the last point is just documenting the various control processes. So kind of like standard operating procedures. For the state, we have a lot of turnover throughout the state. And so having those documented in like a standard operating procedure not only helps when the new staff transitions into your agency, but it's also will be asking, how does this area, what are the controls in place over these areas? And so if you have these well documented, then we can, you can easily provide it to us. We can review that. It also helps you see if there's any maybe deficiencies within that area that you maybe need to add control. So that was just kind of a high level approach of what we do, how we audit, kind of how to better prepare yourselves for when we audit. There are no more questions?
How do you determine which is merit inclusion within the auditor's report, or which one goes into communication with governance, like a management letter, or whether it's actually in the report, or not even that, maybe it doesn't even rise to the management letter. So how do you make that determination? I mean, is it all just based on dollar values, or do you use qualitative and quantitative aspects whenever you're looking at the approach?
Sure. Yeah. So when we do find issues, we do assess those qualitatively and quantitatively. And what that means quantitatively is materiality, the amount of the issue. It's easier to do with the ACFR audit. We have a misstatement, $100, for example. Okay, what is materiality? Is that something that needs to be reported, or is that below materiality? The qualitative aspects then are based on more auditor judgment. So how egregious is this error? What is the risk? What is the magnitude that could happen? We do mostly a sample basis, so we have to try and extrapolate that to the entire population. So maybe we don't find a material amount wrong in our sample just based on how the sampling only picks a few items of a large area. But when we project that out, maybe it does become material. Or maybe it starts to teeter on that materiality line, but we feel that the risk is present that it would rise to a reportable finding. If it does rise to that reportable finding, it will be included as a section 2 or section 3. And if it doesn't, if it just stays, we think it's not material, but it's still significant enough that it could lead to material issues in the future. That's where we'll present what's called a management letter, which is an internal document. It's not a public report that will go to the agency and then overall to governance of the state budget agency will receive a list of all of those management letter comments. And then there are times that there are usually some maybe very trivial items that we'll communicate to the agency directly that we find. But again, it really depends on First, the monetary amount, if we're talking financial statement audit. I do want to mention the federal major program audit is based on compliance. So there is a statistical based sampling that we use that if there are 3 items if there are 3 deviations in a sample, typically of 40, based on how our statistical sample, which is standard based, that means that no longer can be a low risk. There's no amount of sampling that we can do. We can't expand our sample to keep it low risk. So typically, if we hit 3 items or more, that will automatically rise to either a significant deficiency or material weakness. Both of those are levels that will appear as a Section 3 finding. Significant deficiency just being less severe, material weakness being the most severe.
You added a little bit about the compliance auditing there and what you just talked there. How do you integrate the compliance auditing of the ACFR and of the federal programs? Do you audit any parts of like during the ACFR or the federal portion? As you're doing that, do you integrate into that compliance testing?
The areas typically don't have a lot of overlap, but if there are, we do try and integrate that for efficiency's sake. A prime example is the audit of the UI, unemployment insurance financial statements. A lot of what we have to sample when we test those statements do apply to the unemployment insurance federal program audit as well, at least as far as like the populations go. Now how we're testing is different. The objectives of the test, one for the financial, we're looking at the substance of that amount is correct as opposed to necessarily the compliance aspect. But some of those do overlap, populations, different areas that we're looking at.
Basically, the federal programs are looking more at compliance and whether they're following the federal guidelines as far as those programs go.
Correct. Well, that's all the questions. I will now pass it on to Carmen Bashou, who's one of our ACFR audit managers, and she will talk a little bit more about some of the FY24 results.
Thanks, David. I am going to talk today about, first I have to go the correct way on this slide. Okay, so today I'm going to talk about control deficiencies that we find most common in the ACFR. So starting with the basic definition of a control deficiency, which is when the design or operation of a control does not allow management or employees in the normal course of performing their assigned functions to prevent or detect misstatements on a timely basis. So as David said, control deficiencies are communicated in a management letter. So that's an internal document that's used to help management address those control deficiencies. But when the control deficiency continues to repeat in subsequent years, it could rise to a significant deficiency or material weakness. And that would then issue a Section 2 finding, which would be part of our public report. So in the fiscal year 2024 audit, we issued 18 control deficiencies. 6 of those were repeated from fiscal year 2023. And grants receivable is the most prevalent. It's been repeated for 3 years now. And that's the one I want to focus on the most today because it's the most prevalent and consistent across agencies. So before I get into the deficiency, I wanted to talk about what's in the grant receivable balance. So grants receivables contains disbursements that are payable from a federal grant, but the funds have not been drawn by the agency. So since most of the federal grants are awarded on a reimbursement basis, the state loans agencies funds, which are to be repaid to the state through the federal billing drawdown process and PeopleSoft. Once that drawdown process is complete, the agency draws the funds as well from the federal system, that receivables reduced. So it's important to note that when the receivables recorded, when that disbursement is made, the federal revenue is already recorded. So if the revenue is not eligible to be drawn, federal revenue and grants receivable are both overstated. So timely draw of federal funds. So Chapter 7 of the Uniform Compliance Manual states, well, it actually has the comptroller policy, which is to draw federal funds no less than quarterly. And the policy also states that agencies should, if they have a Cash Management Improvement Act agreement, they should draw down those funds in accordance with the approved funding technique. If they do not have a Cash Management Improvement Act agreement, then they should draw down the federal funds as close as possible to when the underlying disbursement is made or at the earliest date allowed by the federal program or regulations. So therefore, we find most agencies draw down funds more frequently than quarterly, usually daily, weekly, monthly. It really depends on the program and the volume of transactions. And so it's important. Yes.
Oh, sorry. And remember, state budget agency issued a financial management circular 4.1 that requires agencies to draw monthly.
Is that new?
It came out last July.
Okay, thank you, Steve.
Hey, Carl, can I ask a question too? What if you had like a situation arose where you actually, you paid funds and you went to draw down, you found out they weren't eligible for drawdown, so you actually have funds sitting in your receivable or your receivable
Right.
that's not drawable? You're not going to
It's not
draw.
drawable, yeah.
How do you get that corrected? How do you make those kind of corrections? I mean, what happens when that happens?
Well, I mean, the state would be then liable for that disbursement. So there is a process in PeopleSoft, it would have to be adjusted in PeopleSoft. And so then that's no longer, we end up reducing revenue in the federal grant that year or the federal revenue account. So the state ends up having, I guess, basically an expense to the state because they're.
What happens in a subsequent period? I mean, you don't know that until like 2 years later, all of a sudden,
Right.
well, that's not drawable. What do I do now?
Right. So, well, it would be overstated revenue in the year that it was recorded, and then federal revenue would be understated in that year because it would just be a financial adjustment entry for that.
Would that become a finding or anything like that?
Most likely, depending on the dollar amount and other factors, but most likely it would be yes.
Paul, I think you're saying too, really, I mean, the expenses need to be moved, right? I mean,
I mean, that's what I'm wondering, because I mean, it's gonna happen.
yeah,
I mean,
the
I
expenses
know,
have to be moved.
Right.
And yeah, the adjustment you're talking about, either you move in more money because you got another grant and then you move the
Right.
expenses there, or you move the expenses to a general fund or a dedicated
Right.
fund somewhere outside the federal fund.
I know, and other things, like, when you, all of a sudden, a lot of times you make estimates and you make predictions, and it's like, a lot of times they're not right. So all of a sudden, now you know something's wrong, and so you go ahead and make a correction. I mean, it's not like you have to go back and make a prior period, you just do it in the current year, correct?
Current year, I mean, depending on materiality, I mean, there might be
It
an
might be
adjustment
disclosure
to
or
the
something,
disclosure in the
that you just
financials.
let it know what happened, right? I
Right.
mean, because I can see how that would happen a lot, especially in the pandemic. Not only the state, but in local governments where a lot of this pandemic money that came in, and maybe you thought it was an allowable expense, then it became not an allowable expense, but yet you still made it.
Right.
Thinking you're gonna get this back, and you didn't. So, I mean, I can see how that's gonna come up and be a relevant issue within the next couple of years.
Yes, and we do have, that was my next slide, a little bit about the, what we looked at in our testing. I think my last point on this was just like the federal performance on the federal grant. So delaying that draw kind of to that point would mean that the funds may not be available to the state later. So maybe it would be able to be moved to another grant, or it would be an adjustment. So in our audit in 24, we found there were 7 agencies that had receivable balances of $82 million for expenses / disbursements that were paid prior to the audit period. So from 2023 and prior, those expenses were paid, disbursements were paid in 2017 through 2023, and the majority were in 2020 to 2023. So probably some pandemic funds in there as well. Since when we audit grants receivable, we get to those in the current year in like late September, early October. So we would expect all of the current audit period funds to be recovered from the federal agencies, sites, and the agencies to draw those down. There could be some timing issues with that, but for the most part, should be done, but there shouldn't be anything from the prior year. So right now, the state's looking at $82 million of disbursements that have not been recouped, and possibly then maybe just understating revenue in the current year. So in order to ensure the grants receivable balance is correct, the federal draw billing module needs to be reconciled. And once the reconciliation is complete, take action to either draw the funds, or if the funds are not collectible, make that adjustment in PeopleSoft, move it to another project, whatever is allowable. And then once again, the timely drawing of funds is important to ensure the state receives the federal revenue. If your agency frequently has outstanding reconciling items or a large volume of transactions, we would recommend reconciling maybe monthly instead of quarterly. That would allow more time to resolve those items, make sure the draws are happening timely or adjustments are being made, and the reconciliations would be less cumbersome. So I know also, well, Stephen mentioned FMC 4.1 is monthly. That also contains PeopleSoft queries to complete the reconciliation. So that is a resource for agencies in order to reconcile their grants receivable module. The last thing I wanted to talk about, so the control deficiencies that we issued, a lot of them are specific to agencies and to their processes, but we did find 4 contributing factors amongst the control deficiencies to discuss. So these are things that you can implement and work on to hopefully prevent a control deficiency in the future. And that is timely reconciliations. I'd say the majority of the state reconciliations we see are monthly, but they could be daily or weekly or quarterly. So you should follow your prescribed standard operating procedure. And when I say timely, if you have a monthly reconciliation, we would expect that to be completed in the subsequent month, daily, the subsequent day. And then once the reconciliation is complete, make sure the outstanding reconciling items are addressed. So if it's not a timing issue of receiving or paying funds, make an adjustment in PeopleSoft, go draw the funds from the federal draw billing system or your federal site. For the review process, the reviewer should be knowledgeable of the process of the transaction or reconciliation to make sure that the transaction is going to the correct funds, the correct accounts, that the reconciliation is done properly, and that review should also occur in a timely manner. And then the last piece that we see is the lack of supporting documentation. So this could relate to a control or a financial transaction. So some controls are meetings, and something tangible we could look at if you have a meeting would be your Outlook invite that would have the attendees, the agenda, anything like that we would accept as documentation of the control. Make sure you keep emails if that's the approval process. Believe it or not, we've had emails that could not be provided. They were deleted or employee left, and so there was no documentation of the approval. A common one that we have that doesn't have supporting documentation is revenue. So expenses, journal entries, those are required to have supporting documentation uploaded in PeopleSoft. Sometimes when we request revenue, we have a hard time getting support, the ROC or anything that, which is the reported collections, or anything that would support that transaction. So if it is a federal draw, you would provide us the ROC and some kind of confirmation from the federal system that would show like the date, amount, program, just anything that supports that receipt. And lastly, the comptroller sent their ACFR survey last month. So if you're providing documentation to the comptroller for the financials, keep support for those numbers. A common one that comes to mind, software work in progress. If you have items that are going to be capitalized, and you say it's 100,000, we'll ask for it, but then the support's not provided. They didn't keep the support that shows the invoices that were paid and the amounts. So any number that you're providing to the comptroller, just keep that support. So that would make it easy and you could just hand it to us. That wraps up unless anyone has questions on the control deficiencies. Next up is Jenny Wagner. She's one of our federal audit managers.
Hello. to pull up a couple items for you. Okay. Just let me talk. Matrix first. Okay, so comfortable stop sharing. Okay. Really small, so hold on a second, we'll get it a little larger. A little better. Okay. So, as Carmen mentioned, I'm Jenny Wagner. I'm one of the audit managers of the State Board of Accounts over the federal program audits. I've been with the state for 20 years and with the State Board of Accounts and state assignments for 11. And so I started with auditing the federal programs and then kind of moseyed up to the manager level. And so what you're seeing here now is that we decided to do kind of a 3-year comparison from 22, 23, and 24 of all of the Section 3 findings by fiscal year. And so what I did is created kind of a matrix that shows the 12 different compliance requirements and the number of findings that each year contained for those individual compliance requirements. So let me make sure that I can. So as you can see, we're starting at the top with allowable activities, allowable costs, cash management, the 12 are listed. In 2022, we had a total of 34 findings. In 23, we jumped up to 40 findings, and then total findings of 42, and these are just federal findings in 2024. The 4 highlighted in yellow compliance requirements are the largest offenders, I guess you could say, as far as the compliance requirements that contain the most findings for the different programs across the state. And so as you can see, that period of performance, reporting, specifically for reporting today, we'll be talking about FFATA only. That's been kind of prevalent across the state as issues that we've had. And then subrecipient monitoring. And I'm just going to touch on special test and provisions. Obviously, you see that's the largest number. They're very kind of all over the place, I guess you could say, with special test and provisions. They're very particular to the individual program. And so although as I go through some examples of findings and examples of control activities here in a little bit, that won't be the most detail that I'll go into for the special test and provisions, because it's kind of hard to pin down a specific control activity for something that's very particular for a federal program. My findings and things of examples and stuff, you'll also notice that I have made them more general to not call out an agency. I'm using actual examples from findings we've had in the past, but no agencies are listed. So it also makes it kind of difficult to talk about the special test and provision. That would just call out the program in itself when you're going through it. But anyways, so period performance to kind of start, we had 2 findings in 22, 3 in 24, 5 in 23, and then 5 in 24. For reporting, these were specifically related to FFATA 8, 7, and 10 then for 2024, just last year. Sub-monitoring has been a pretty big issue throughout the last several years. Went from 4 to 8 to maintaining 8 again for fiscal year 24. And then again, the special test and provisions, we had 12, 12, and 13. So the next thing that I'll be talking about is just some of those common findings, just examples of what you typically see within those, particularly the top 3 compliance requirements. And then I'll give just kind of a brief overview of the compliance requirement as we start to go through it, because there might be some individuals that don't know exactly what I'm talking about. So now let me stop sharing, and I'm going to share the other document that will give my examples or show my examples and everything. Okay. Everyone see this? I know it's kind of small too a little bit. So the first, there's a couple examples for period of performance. So period of performance in a nutshell is there are particular federal programs that have a period of availability or a period of performance. This is usually what the obligation or expense of the actual service that's occurred. There's a time limit or a time frame that the federal government is giving for that particular grant year. And so some of them is 1 year, 2 years, 5 years. It just depends on each individual program. Some of them don't have a period of performance. Most of them do, but they're not also always what we have to audit. So again, if we're auditing it, that is specific to the compliance supplement that indicates the period of performance is required for us to audit. And in this case, we would, pick that program up and look at the actual grant and see what the actual period of performance would be specific for that grant and audit to those standards that the grant agreement indicates. And so for this example here, in example 1, the state agency, can only charge allowable costs incurred during the approved budget period, a federal award, a period of performance. The audit procedures for testing the period of performance compliance requirement, including testing for federal awards with performance period beginning dates during the audit period, transactions for costs recorded during the beginning of the period of performance to verify that the costs were not incurred prior to the start of the period of performance unless authorized by the federal awarding agency. For this specific test, we selected a sample of 7 journal entries charged to the grant program during the first 3 months of the grant period for the federal award noted above. Of those 7 journal entries, 3 of those journals comprised of 14 different vendor invoices, were all obligated prior to the period of performance start date and without authorization from the federal government. So in aggregate, that total was $7,635 was obligated before the period of performance for the federal award began. So obligation is a really big term that really defines what and where you can charge those grants or those expenses to what federal fiscal year. The performance itself is usually related to the service that occurred, the date of the service, whether that's an actual singular service that was provided. It could also be the date the contract was entered into. If it's a full contract that is supporting a period of time, the date that the contract was entered into essentially is obligating the entire amount of funds at that point in time. The state is setting that money aside. And then it would be liquidated after the fact, and the payments would be made after that. And so there are kind of differences into what that definition of obligation is depending on the expense that's happening, but it always should fit within the realm of the service provided, the contract provided. It is not when the payment occurred. The pay date is not the obligation date. I would say never. It would never be the obligation date, especially in the state of Indiana. Expenses just don't go out the door the same day that the service occurred. That just doesn't happen. And so typically when you're seeing expenses in October, those are expenses from September. They're actually things that occurred, services that occurred in September, paid in October, maybe even later. Sure.
Jenny, would you say the most common obligation date is maybe the purchase order date? I mean,
Yes, we see the purchase order date. Sometimes we'll go with the requisition date, even if it's a little earlier sometimes, because that process, starts. We can see when it starts usually in PeopleSoft. And so many times that's what we're going with is the purchase order requisition date is kind of that starting or obligation point, especially when it's related to a contract or something that's got an extended period of time. Usually if it's an actual individual service, we go off the invoice itself and it'll say, for the month of September, or whatever, or the month of October. And so that's typically what we're, kind of guiding us, but there are always extenuating circumstances that can come along that definition of obligation is a little different, and how it fits to the scenario that occurs, within that expense and that program. Any questions on example 1? So let me scroll down to
Jake, does the effort, not the effort, but does the federal grant, the CFR, does it define when an obligation occurs?
It does, but
Where's that at?
it's in the compliance supplement within the very preamble of period of
How
performance.
does it define obligation?
It defines the obligation of when the service occurred, but it very it just plainly says that. It doesn't give more detail as far as how a contract would be when the date that the contract was entered into, the entire amount will be obligated.
As they're asking the question of like on how you determine when you're going to use this obligation. Do you have that defined in the compliance, in data that we have in our compliance supplement or anything like that? Is that defined there so they can have a reference to go back to so they understand
Yes.
what the definition of an obligation is?
Yes, but it is, again, it's not, the CFR referencing is even, it's like kind of takes you there for within period of performance. It talks about obligation in the very basic terminology. And then you can go with another CFR referencing to find other definitions of obligation that would give, contract or service, date, things like that. So unfortunately, it's not as clear, as the definition there of obligation could be this laundry list of things. So we've had to do research to kind of dig around and figure out, because we've had instances where we've had errors come up that we are considering an error until the agency is like, wait a minute, we entered into this contract, 2 years ago. How is this not within the period of performance? And so then we had to go back and find more definition of, the date of the entry. The contract is actually obligation in that
I
case.
guess what I'm getting at is, are we sharing with the auditees the specific definition that you are using?
Yes, yes,
And do we have it defined within our compliance supplements, the information we're giving?
Yes, and also, there's an FMC, is it not 4.1?
It is all within 4.1.
Yes,
yeah.
and 4.1 has a default, in case that the explanation by the individual federal program is not real clear.
The only reason
This is the
the only reason
default.
I ask is that I want to make sure that people know to go to those FMCs because, there is an extraordinary number of period performance errors that are occurring during the time of the audit.
Yes.
And it's like, one of the things we have to do is figure out how do we get to the various agencies to clear up that problem, because period of performance should be defined extensively. And apparently, like I say, through the FMC or through our compliance manuals or something like that. So there isn't any question, because there are ramifications of period performance errors, correct? And what might that be?
Well, we typically would list them under as question cost. And
Which
so the
means
federal
the
government-
state could have to reimburse that money to the federal government, which is something we don't want to happen, but can happen if agencies aren't following that period of performance. So it is a very important area and something that should be able to be followed by most agencies. So,
Yeah.
I wouldn't expect this to be growing, and it unfortunately is an area that is growing. But we need to make sure that we're addressing that from within the agencies themselves. They're having a complete understanding of what period of performance means.
Yes, and I think every instance where we have had errors and findings and things, we discuss with them in depth about what those definitions are, where we've referenced and where we're able to find the location of those definitions. So that way they're able to build on that kind of for the future, to remember those kinds of things. A lot of times that's what we're finding is the issue, is they're truly not understanding really what the obligation date is. And so the expenses are going to the wrong federal fiscal year.
Is there a way possibly, to work with comptroller's office or budget or somebody to help get that information out there so it's not something we have to build on after the fact?
Well, the
But then we're building on
FMCs,
forward,
the
forward.
FMCs do a very detailed discuss as far as the different definitions of obligation, beginning dates, ending dates, and adjustment has to be back to the original expense, when that service has occurred. We are giving extensive, documentation, and there is, resources, I think, available out there. It's just making sure we're reaching the right individuals who are actually approving these transactions and inputting them into the software. That's really, I think, where the breakdown is happening, because you're seeing things from the program side, right? The program side understands the period of performance sometimes better than the finance side. But then the finance side is who's making all these transactions. They're the one posting all of these expenses in the PeopleSoft. And the AP clerk's who's approving them. The AP clerk may not have a clue about period of performance. And so unfortunately, where the buck stops as far as where that approval is happening is not even, sometimes period of performance isn't even being thought of when that approval is occurring. And unfortunately, we're seeing that through many agencies, that's just the process. it's not necessarily, you know, I don't know, it obviously is a breakdown in it because you need the educated, you know, you need the individuals who are knowledgeable of the period performance and mindful of that to be the one, at least in the process of approving that transaction. May not be the person who hits the button, you know, within PeopleSoft, but somebody in the forefront needs to be like, okay, wait, no, that doesn't go to that fiscal year, it goes to this federal fiscal year. And that's where I think that the majority of the breakdown that we're finding is between obligation definition and just who's approving that transaction is not actually reviewing it for period of performance. That's typically.
And I think one thing Susan will be bringing up about workshops that we are planning on offering, so that maybe we can better target those people who have that responsibility or where the confusion might lie, and bring in those people so that we can discuss that. And so it would behoove everybody who's listening today to maybe be thinking about that, so that maybe there can be participation in those workshops, and give the people who have to deal with this the tools that they need. So.
I'm gonna kind of scoot through example 2. It's just talking about period of performance. This one specifically is discussing adjustment entries that were tested and reviewed. Again, we selected 25 adjustments from a particular grant. Of those 25, 3 of them were transactions that were obligated prior to the period of performance. Again, this was before the start date and was not approved by the federal government. Upon further review of those adjustments, they corresponded to a total of $318,689 worth of unallowable expenses that were obligated before the period of performance for either of the federal award began. So again, in that example, you're talking an adjusting entry that we're going all the way back to the original expense. That's what we're looking at as the obligation date. So an adjusting entry that happens in my audit period that was for something a year and a half ago, I'm looking to see where the disposition of that obligation occurred and where you're supposed to be applying that adjustment. And so if the federal fiscal year is still focused on the expense and the obligation when that original expense occurred, okay? And so that's why many times we find a lot of our errors in adjustments, because what's in PeopleSoft is not even quite the right information a lot of times. We have to kind of go back to that Excel file usually that's input and then back to the original, you know, expense. And a lot of times we're finding that those adjustments are just being moved somewhere to either close a grant out or to finish up something, but they're again not being mindful of period performance and the actual original obligation expense that is occurring.
I would also maybe bring up, since this is being recorded and we will have identified the areas, the timing of them, that perhaps those who are listening or virtual, they might, when they receive about the recording be available, that they might want to go ahead and share this particular section.
Yes, definitely. Any questions on period performance? So we're going to move next to FFATA reporting. There are many other reports that we test, so I don't want you to think that FFATA is the only thing, you know, that we're testing, but it is one of the main areas that we're finding consistent issues across the board. And so again, we've got a couple examples of some of the findings that we've had. These are from last year, again, just kind of cleaned up to make it more general in sense. So the state agency is a direct recipient of the administering agency of the state's grant funding, is responsible for identifying which, if any, subawards that have passed through to subrecipients were subject to the reporting under the Federal Funding, Accountability, and Transparency Act, that's FFATA. They were also required to report first-tier subawards that resulted in an obligation of $30,000 or more to the Federal Funding, Accountability, and Transparency Act subaward reporting system, or the FSRS, which has now switched to SAM.gov. So in this case, for this particular example, there were 16 subawards granted during the period utilizing a particular grant program funding that met or exceeded the $30,000 threshold. Each of those 16 subawards were reviewed for proper submission. In this case, the FSA did not report any of those subawards to the FSRS. The total of that was $31,333,210. So in this example, this was 100% non-compliance for this particular program. All of the awards were not uploaded to FSRS. And in this particular error, in this issue, it was related to sub-state agencies. Okay, so sub-state agencies that the state granting agency gives funding over to. So FSSA gives funding to IDOH, just an example. IDOH issues subawards. They're required to submit those subawards to FSRS, but they can't because they're not the administering agency. FSSA has to do that, okay? So we're seeing a breakdown in when a sub-state agency issues subawards, the communication is not occurring between the main grantor agency and the sub-state agency to ensure proper reporting for FFATA. That's one of the biggest problems that we're seeing throughout the state. And that is really lack of knowledge. It was, everybody was unaware that does the work that you can't report if you're not the administering agency. And so FSSA is thinking IDOH is doing everything they're supposed to be doing, but they can't. But they're not communicating to FSSA that they can't because they think that FSSA is doing it and handling it. And so, of course, miscommunication, nothing gets reported. And that's the case that's happened in this example. And so the federal government has made this a requirement because these are subawards that are being issued. It's transparency. They're wanting to make sure that everybody is aware of these subawards and the funding that's going out to these subrecipients. And then these expenses or these subawards that are over that $30,000 threshold are getting reported to that FAIN, the Federal Award Identification Number that comes from the federal government based on each federal fiscal year. And so then those are reported in the subsystem, in this, it was FSRS, SAM.gov now, that will document several different elements for that subrecipient to show transparency of that subaward. Dollar amount, their UEI number, which is a unique entity identifying number that the feds give in relation to federal programs. And so it's an important piece, that has to be done. We started testing it again. The feds kind of brought it back for us to start looking at back in, I believe it was 2020, maybe 2019. And it's been consistent still in the compliance supplement. So they're seeing issues with it, I think, and wanting more of that transparency and the reporting appropriately so that they tasked it kind of to us still to continue to be monitoring that and testing it. And unfortunately, it has been a consistent problem, as you see, from that matrix that I had, findings, continue throughout the years. And I would say even really haven't gotten better, maybe even a little worse in some cases, and within different agencies. And so the second example, a little bit different in that we were able to actually select a sample in this case. They did report some stuff. And so in this case here, just the state agency is the direct recipient, and the administering agency of the grant is responsible again for identifying those subawards. I'm going to kind of skip down a little because we went through all of that part. So there were 49 subawards granted during the audit period utilizing this particular grant funding that met or exceeded that 30,000. Of the 49 subawards, we selected a sample of 7 subawards to review for proper submission to the FSRS, and then we noted the following errors. So 3 of those subawards were not reported at all, 3 of the 7 that we tested. 4 of those subawards that totaled the 1.4 million were not reported timely. And 1 of the subawards was not reported correctly. I know that doesn't total to 7. One of them overlaps into both groups. So I didn't add in correctly. But the 1 subaward that totaled the 273 that wasn't reported correctly, it was an odd one. The total award was split into 2 different federal fiscal years. They reported the first hunk, but never went back and reported the second. Now, in this case, you just report the whole thing, but you should have just split it and reported it all at the same time. Because you can't report it all into the same thing if you're using 2 different federal fiscal years. So you'd split and report the 273, 784, and then the other hunk, that should have been reported. That secondary piece, they never went back in and reported that. So that's where that one was just incorrectly reported. Only half of it got documented. And again, this is a combination of grantor agency and sub-state agency. So this is both. Grantor agency didn't do things quite right, and the sub-state agency wasn't reporting. Those 3 weren't reported at all. And so that's kind of a breakdown in 2 different, areas of, again, sub-state agency issues, not knowing that they've issued subawards, not knowing that they were unable to report, but then also the grantor agency not reporting accurately, timely, multiple kind of issues across the board here. And that again is something that we're going to have a workshop on. In 4.1, the FMC does talk about FFATA and gives some very good detail and specifics in there about how to do things. This is really, I think, something that is more educational that needs to happen as far as sub-state agencies and grantor agencies talking to each other more and being more communicative. There are instances where we have agencies that are grantor agencies that don't even know that the sub-state agency has issued sub-awards. Completely clueless. And so when we ask them, did you issue any sub-award? No, nothing. But then we can go into PeopleSoft and see that things are labeled as sub-recipients and payments are labeled under sub and, 0.57 expenses under grants, and so the two things don't connect. So when we come back and ask them, they're like, oh yeah, that's business unit so-and-so, that's not us. I'm like, yeah, but you are the grantor agency. You're the one that has to report it all. So are you reporting it? Well, no, I mean, that's their grants. No, it's under the umbrella of the program itself. And so the grantor agency has to be responsible for it and they have to know about it. And so that's really, I think, education and communication is imperative to get this issue addressed and fixed. I think it is something that could be worked on statewide as far as sub-state agency communication and how that can be rectified and how it can be better. But there are going to be some things that are just going to have to be handled, by each individual agency, and it might be a little different on how they do it. But there are queries that some agencies have worked on to develop by using that sub function that can pull POs, that will have that sub, functionality to document this is our population, if you will, for each month that has to get reported to FSRS or SAM.gov. So we're kind of working with different agencies to try to find the best query, the best, solution and process that we could try to give out as a recommendation, to agencies to use. It is, of course, just that, recommendation, but I think that if you've got a starting place that everybody can kind of jump off of, would be better than everybody kind of doing, different things out here. So, any questions on FFATA? So the next area then is subrecipient monitoring. This one has also been a thorn, I would say, in my side or in our sides over several agencies throughout the last several years. Subrecipient monitoring it's challenging. There's a lot of pieces to it. It's not just one thing, that you're doing. It's all about issuing, the right subaward documentation. It's also monitoring the entity appropriately or that subrecipient appropriately. And also a part of that is ensuring that the federal audit function is occurring. If they're required to have a federal audit, that is happening. If there were any findings associated to it, that you were following up on those findings associated to your program, et cetera, et cetera. And so this finding, it's one finding. Actually, this is one where I just did one example because it's very detailed and it gives context of all three areas and problems, or all three areas and problems in all three of those areas. And so I broke it down, I added a little bit more information even to the finding than we normally would include in the actual written finding because I wanted there to be more context in there for you guys to follow along easier. And so the first part of the condition and context, I'm not going to read verbatim. It just gives a very detailed explanation of what is required for subrecipient monitoring, which are basically the three pieces that I just mentioned. You have to issue the right subaward documentation. You have to monitor activities that would include, reviewing financial and performance reports, follow-ups, ensuring, they took timely action if there were any deficiencies or findings. And then they have to also ensure that every subrecipient is audited as required by subpart F of the uniform guidance when it is expected to be. And so this finding kind of touches on all three pieces. And again, so I've broken it up between, we have a granting agency issues and sub-state agency issues all kind of rolled up into this finding together. So the granting agency had some issues with the award identification information in this example. They issued 33 subawards, we tested 4. Each of the 4 did not contain several identifying information elements that are required to be included. We are working with IDOA right now in trying to get some of these issues rectified because it's dealing with the boilerplate. there are items that are supposed to be in the grant agreement that are not in there right now. And so that is something that is not really your fault, but you are required by IUA to use that boilerplate contract and or grant agreement. And so as things are added to those elements within the grant agreement based on what the feds want, IDOA should be, updating those things and the contracts, and stuff. And so we're in the midst of trying to discuss with them how to rectify that issue, because they can't, the state agencies don't want to deviate from using the boilerplate, but IDOA is kind of the stopping point at this point right now to try to get them to fix that. But if that was the only problem within subrecipient monitoring, then we'd all be good. But unfortunately, there's further issues, that you see it here. So during the award monitoring, the federal audit tracking for the granting agency, in this example, again, there were 92 subrecipients that required monitoring. Of those, we selected 10 from the granting agency. Of those 10 selected, one of those subrecipients was not monitored appropriately. And they also did not ensure that the single audit was expected, or if expected, did happen, if there were any issues, and follow up to that for that individual, that one. So that's within the granting agency. So the sub-state agency that the granting agency gave funding to, they issued subawards as well. That sub-state agency issued 24 subawards. We selected 3. Of those subawards, 3 of them, again, did not contain the proper awarding identification information. It is consistent across the board, which is why I know that it has to do with the boilerplate that's not containing the right stuff. And so the other piece of this just documents that during the award monitoring and federal audit tracking, so in this case, the sub-state agency issued 11 subrecipients that required monitoring. Of those 11, we selected 4. The sub-state agency did not effectively monitor 3 of those subrecipients to ensure that a single audit happened. They monitored them for their regular during the award audit, monitoring activities. They were okay there. But the federal audit piece of it is a part of that. And so that's what was missing. For 3 of the 4, they didn't monitor whether they even needed to have a federal audit, should have had a federal audit. Did they even have a federal audit? They didn't do anything in relation to them. And so again, it's I think a breakdown of maybe knowledge, understanding of what's required. When we say when the feds say when you're supposed to track, that means there should be something noted that you're monitoring the dollar amount that entity has received as a sub-recipient, and whether or not it's over 750 or under, soon to be $1 million. And then a yes or no of yes, a federal audit should have happened, or no, it's not required. That's tracking. So many times we don't see anything on a spreadsheet. Oh, no, they didn't have to have an audit. Well, how do we know that? Did you track it? How do you know that? Oh, no, we looked. Well, then when we go look, there's a federal audit out there. And we're like, well, see this? Oh, well, see, we were looking. So we want to see something more that's tracking that. A yes or no. We know last year they weren't required to have an audit. So we moved on from that entity. Whereas these ones, they all had to have, a federal audit, and now we've reviewed them. There was findings associated to TANF or UI, or whatever program that it would be, that they're having to kind of double check and make sure that those local entities or local units aren't having issues out there.
Jenny, is there somebody that's assigned at OMB or budget or comptroller's office that specifically monitors the subrecipients that does that at the state level? I mean, I don't know. Okay, I'm asking that.
Each individual agency, if they have an internal audit staff or division, many times will handle the federal audit function because it can be done kind of all together. The actual monitoring that would occur is usually handled by program staff from each individual division, even within an agency. You could have multiple divisions within an agency doing different things of monitoring for different federal programs, overarching, within that program.
There's no centralized,
No.
Steve, you might be able to, you're a little bit more knowledgeable on that.
No, we stressed it in, I'm sorry,
No, yeah.
budgeting.
Right, and I know that's what everyone do, I mean, you're like.
MC 4.1, right, I mean, it's
Yes.
discussed pretty extensively in there.
But there's still not one singular
No.
person or entity that says, okay, I'm gonna oversee all of the subrecipients. I mean, just between me budget and comptrollers office, I think that's something maybe we would work on.
Yeah.
Of seeing and with administration, see if we can find somebody that can take that responsibility. Because once again, the goal has to be to clean these findings up, where they don't continue. And if we are going to allow each agency to do the monitoring, then as you're doing workshops, we need to make sure we're doing workshops with that person within that agency that has been assigned that task.
Yes. Yes.
You know, and says, okay, this is what the requirements are, to make sure that that gets done.
Absolutely, yes, yeah, those workshops, again, these particular ones will be kind of the ones we're starting with to probably have workshops over, just because they're the more prevalent issues that we're finding in the compliance requirements. And so the workshops are gonna be more geared to deeper in the weeds and bringing in the people that are actually doing the work, not necessarily the CFOs and the program directors, you know, and stuff. It's good for them to hear the information as well, but the person who's actually entering the transaction or doing the monitoring or doing the risk assessment associated to that monitoring for that program is really who needs to be here in those workshops to really get the right information to the right people. And I think a good, trying to uniformly do that or have somebody even with it statewide, agency-wide at least, you know, not different division-wide, or somebody overseeing it would be a good process, because there are different divisions that handle different programs within, you know, the agency, but they really should all be doing it very similarly, you know, as far as the monitoring is supposed to be happening. So, any questions on sub-monitoring? Okay, so then, so the only thing, again, I didn't give an example on the special test and provisions, so, so what I'm going to move into now are just some common control activities. Again, these are just examples, and I'm calling them control activities because I'm not signifying that it's a key control always, you know, necessarily. These are activities that we see many agencies have in place over these particular compliance requirements. But they are not an end-all, be-all. That has to be what, you know, the actual control activity or key control that you define will be for your particular program. So within this, they're starting with period of performance. And I have also listed the FMC 4.1, the financial management circular is very specific. Each one of these areas, it really does give a very good detailed explanation, what it is, how you should, you know, what you can do to be in compliance with that compliance requirement. And so the most common control activity that we see for period of performance would be if the agency management staff reviews and approves the individual transaction to ensure the obligation was incurred during the period of performance, which is separate than the individual who initiated the transaction. So there's two things happening here. You have a knowledgeable individual over a period of performance and the obligation dates and everything, reviewing and approving that expense. The second item is segregation of duties. That's a major thing when you're talking control activities. You have somebody who's entering the transaction and then somebody totally different who's approving the transaction. That person who's approving is who needs to be mindful and knowledgeable of the period of performance. And if they're not, then before the process would occur in PeopleSoft, program staff, you know, somebody needs to be reviewing the invoice, the contract, you know, whatever it is, to say, yes, you know, this is the right period of performance, this is the right federal fiscal year. Because many of these programs, they overlap, right? You've got multiple federal fiscal years operating because they're a couple year-long period of performance. You might have some wiggle room as far as where you could charge that expense based on the obligation. Again, it all comes back to being knowledgeable of that period of performance and an obligation definition specific to that actual instance that you're talking about. But that is typically what we see in most cases is the control. It's just not always effective because the right person is not really reviewing the expenses. Any questions on that one? So then with reporting, I gave a couple examples that we've seen here for FFATA specifically. The agency maintains a spreadsheet of subawards or amendments issued each month that were reported for FFATA purposes on SAM.gov, which is reviewed by management. So we will many times see a spreadsheet maintained that will contain all the subrecipients that are listed on it and the subawards that were issued, when it was issued, dollar amount, and then that's where the population is built for FAFATA. Anything over that 30,000 or 30 or more that would be issued during that year is supposed to be reported. And it should be reported timely, which would include, would be, if it's issued in July, it would have to be submitted into FSRS or SAM.gov by August 31st. So essentially you have the following month by the end of the month. Whenever the stuff would be issued July 1st, you still would have till August 31st. And still have till the end of that following month. But there's many times that, again, we're seeing months, years sometimes, like they're going backwards and reporting them, but they're way, way behind. We appreciate that they're reporting them, but unfortunately that is, the timeliness is something that we do have to report in finding when we do actually audit it. So that's one example of control activity that we do see. Another one is that we see sometimes an actual individual cover sheet which documents the FAFATA elements required to be reported from that subaward. And it's been uploaded to SAM.gov. It's completed by agency staff and again, reviewed and approved by agency management. That's not usually as common that we'll find because that's an individual subaward, every one of those. And so sometimes that's a smaller agency, doesn't have as many subawards that they're issuing. If you're like IDOH or even FSSA, that you're issuing hundreds of subawards, sometimes monthly, depending on when that push, goes out from your federal fiscal year, usually we'll see that spreadsheet process being maintained, they're being added to it, documented when it's reported, dollar amounts, all that type of stuff. And again, FMC 4.1 does talk about FAFATA reporting. It gives some very good useful tips and ideas. But again, this is one that's difficult, I think, across the board, just to needing to communicate better between grantor agencies, sub-state agencies, and how those things should be reported and who's really responsible, for reporting that stuff. So then into sub-monitoring. Again, I just broke it down and gave one example, or a couple for during the award monitoring, but one for the others. The award identification is pretty much a standard across the board that we take that the subaward, which contains the required federal elements, is signed by both the state of Indiana and the sub-grantee. Now, if the boilerplate contained all of the proper elements, this would be foolproof because everybody has to sign these documents for it to ever go anywhere or for anything to ever happen. And so working with IDOA to get that rectified should address this award identification as long as you're using the boilerplate contract and your exhibits and things are contained in there that are required to be contained. During the award monitoring, gave a couple examples there. We'll see state agencies maintaining a spreadsheet that documents all their subrecipients, which require monitoring, which includes dates of monitoring that has occurred, and then that spreadsheet is also monitored and reviewed by management. Many times it's something they're documenting on the spreadsheet itself, reviewed on this date, by so-and-so. In an electronic world, we will accept that. But we also are looking for the detail, in the actual the spreadsheet. When the actual visits occurred, if they're doing on-site, if they're doing desktop reviews, what's the results of those? Were there reports, things that we could look at to ensure that it's not just stuff put on a spreadsheet that actually happened. And so most of that includes other documents that we'll obtain, from them for the compliance aspect of it. This is mostly just talking about the control side of things and where they're kind of documenting the monitoring, kind of the global, everybody together, making sure that that's happening. And then the federal audit monitoring is the last piece. Many times, again, we'll see that the state agency maintains a spreadsheet of all those subrecipients, which documents whether the subrecipient was required to have a single audit or not. And if there were any findings to follow up with, management review, and whether the final recommendations were necessary, et cetera. And so most of the time, this is the one that I have seen done if there is an internal audit division within just internal audit. The federal audit monitoring, FSSA is a good example. FSSA internal audit maintains a singular spreadsheet that documents all of their subrecipients on it. And then they are tracking dollar amounts received, is it over the 750? Then the next column is yes. And is there a federal audit? And they're going out to the federal clearinghouse to check for the audit. They're not waiting for the audit to come to them necessarily. So we see the work, being done on the spreadsheet. That gives us the warm and fuzzies that, there's actually monitoring happening and that things are occurring. And most of the time we'll go and verify a lot of that stuff. We'll go out and look at the report itself. Is it dated the same date that they've got in the spreadsheet? There's different things that you can monitor and check yourself to make sure that there's not just things being put on the spreadsheet to look good. But this is typically, if they do have an internal audit division, this is something that I've seen handled within different divisions or agencies, I guess you would say, as a whole by them. And I will say, when FSSA brought that to internal audit, it cleaned up that piece of sub-monitoring significantly because it was one group, handling all of that. When you can compartmentalize something more, make it more uniform within a one group or a couple people that are doing things, it does make it better, but it's hard when you've got such a large agencies, entities, and lots of subrecipients in different cases. So it's not always feasible, we know that, but I think the more that you can make it one group or area, the better, like you were saying, Paul, you to kind of make it more across the state. When you have 15 different divisions doing stuff, there's bound to be problems, and things missed, and errors and different variations in ways that you want to do it or how you're doing it. And so getting you more kind of standardized, I think would be helpful. And then the last thing I just mentioned for special test and provisions is just depending on that specific special test and provision, the agency needs to develop controls that will prevent or detect and correct material noncompliance. The controls developed will typically include some type of segregation of duties where more than one person is involved in the processes that are related to that special test and provision. What I will add to this is that I will just say that the special test and provisions are always listed in Part 4 of the compliance supplement. They are not secret. We don't make them up. We don't just come up with things, to audit that we call special tests and provisions. These are specific within the compliance supplement, and we have to audit them. There is no materiality considered for federal. If there's activity that occurs for that special test, we have to pick it up and we have to audit it. Therefore, you are required to have controls that would be in place specific to that special test and provision. And again, I can't give examples really because each special test and provision is particular to that program and usually different than the other 12 compliance requirements, because otherwise the feds would usually dump it within one of those 12. And so I would just encourage everyone to go to your compliance supplement, look up your program, go to Part 4, which is specific to the program. And if there's any special test or provisions, it's going to be the last section, section N, that will give you a detail. Like Medicaid and CHIP have like 9 or 10, or 8 or 9 special test and provisions. TANF has 4. Food distribution cluster has 1, so it varies, between different programs. And some things are program related, some are financial related, wanting to see reconciliations, or outside, things are done outside of the state. It just depends. But I would say 10 times out of 10, if you go to that part and you know what those compliance requirements are, and you focus on the controls, segregation of duties that are around that specific special test and provision, and focus on the objectives of that special test and provision and developing your controls around that, you'll be good. But this is definitely an area that we find that sometimes people don't even know that these special tests exist, and they're completely clueless. And so that right off the bat, you've kind of shot yourself in the foot because you have usually no controls in place if you didn't know about it. And then we've got a problem of kind of trying to backpedal and see, did you do anything even related to the special test and provision? So again, they're not secret. They're out there for anybody to see. Sometimes they do change from year to year, and sometimes they take some away too. It just depends. But typically there's some pretty standard ones for each program. If they're there, they usually stick around year after year. Any questions at all? Oh, I have.
Jenny, do you find generally when you go to look at agencies that they have a good understanding of what the compliance supplement is? I mean, do they have a copy of the compliance supplement for the grants that they get and that they actually understand, what they are? I mean, I know whenever we go through our audit from the federal government, I mean, one of the things they come in and do is like ask the auditor when they're auditing that program, do you have an understanding of it? I mean, can you go and give me this compliance supplement? Do you understand that grant? I mean, do we find that we are doing that here at the state? I mean, like I say, do they understand the grants, the compliance supplement of what those actual requirements are. I mean, in your general, when you're going in and looking at agencies.
Sure. I
You
would
do
say probably maybe like 40-60. 40% do know, I would say 60% don't. And that's unfortunate because it is a public document. It's not something that is.
That is, and I think that's something that the state itself should work toward, is whenever agencies do get grants. I mean, if you do get a grant, find out, get that compliance supplement, understand, and actually read it. I mean, understand what that grant is, what what those periods are. I mean, we know what some people say about the grants or what different proponents of those grants say they are, but let's get that actual compliance supplement and understand what that grant is. And if you don't, I know for sure that Jenny and them will provide you a copy of that compliance supplement that's specific to each individual grant that you get, that can help you more completely understand the purpose of that grant and what your requirements are.
Yeah, I agree. And I want to clarify and make sure I'm being clear in saying that 40%, I didn't mean like they don't know how to operate their grant or anything. I wasn't meaning that. I just mean the actual knowing the details, like Paul was saying, the actual understanding the details behind how that program is even audited can really help you in how you operate it and making sure that you're hitting all the marks, hitting all, the pieces that are supposed to be there. I think, the agencies that we've dealt with and the entities and individuals that we work with know what their grant is. They know what to spend, how they're supposed to spend, what's an allowable activity, what's not an allowable activity. It's all the other stuff usually that gets missed or lost, or they're not as knowledgeable about period of performance, other things as far as like, again, obligation date versus liquidation date, things like that. And so the compliance supplement not only will tell you what we're gonna audit, but will give you kind of a background on each of those individual compliance requirements, what it entails, what it means, what it is, some of those definitions. A lot of those general are in part 3, but part 4 is going to tell you what we would specifically audit. And then if there's something specific to that program within period of performance or within cash management or within, a different compliance requirement. And so it's going to even go down even more in detail and specify what exactly for your program we're going to be looking at if it's something different than the general procedures, that we would follow within that compliance requirement. And so since I've been up here, I push everyone to go out and read that document. It's definitely, it's not the funnest read, but it definitely is very good information and will help prepare you for the audit. And again, just be mindful that whatever comes out here in FY25 that's coming out soon, it should have been, they said May, but we're already in June a little. So hopefully it'll be soon. Again, you have to think of that as retro. We're auditing backwards, right? So, the compliance supplement that's coming out is FY25 because we're going to be auditing, FY25. So there could be things for FY26 that's already starting now or soon. It might be a little different from FY24's compliance supplement. You won't have, 26s till next May or June. And so you're always kind of going backwards a little, but it's still good information. It doesn't change that drastically that you're going to be in left field, looking at FY24 and we're over in right field, in 26. So I would just encourage, that you go out and look at that.
I will say the comptroller's office references the compliance supplement in our instructions, and I have had an uptick in requests on where to find said compliance, so that's a bonus.
That's plus, yes, that is a bonus, for sure. I think the more you guys, that we all can push that as a really good tool, for people to utilize, to reference and go back to. Nobody ever wants to, I think, have an audit that they're like, I don't even, that's like the worst feeling in the world I can imagine. And so this will alleviate that 100%. You would know what we're going to be looking at and what we're going to be auditing. Okay, I think my time is up. I'm going to pass it back over to Chase. Thank you.
Morning. Thank you, Jenny, Carmen, and David. We're talking about the external side. I will talk about the advisory side. So my name is Chase Lennon. I work in the State Advisory Services area. Who is SAS? We came up with a mission statement, and I'll just go ahead and read it to you. SAS, we are committed to providing the state of Indiana with objective solutions to enhance the state's risk management, governance, and internal control processes to ensure effective operations, financial accountability, and transparency. What does that really mean? It means that we're here if you call us. Really, anything that you need help with, we're here for. But more specifically, what we're focusing on are compliance and accounting assistance, getting you prepared for an audit. The external audit team, they need to have some sort of independence. They can't really direct you too much and do the work and then audit that same work. But we have some safeguards in place for the advisory services group. We can't do that. So for example, if you present us with a situation, compliance or financial audit wise for the ACFR, you can call us and say, in an audit, how would you treat this? And we can provide you an audit position. We can help you with federal, like compliance, uniform compliance guidelines from the state, Indiana code. We won't be providing you like a legal opinion, just an audit position, the position that we would take in the course of an audit. Like today, we also provide education and in-person trainings. We can really present on anything that you want, but topics we've presented on in the past are down here: internal controls, best practices, process improvement, resolving audit findings, etc. So that's who we are. I want to talk a little bit about past projects we've worked on and then some current projects that we're working on. In the past, and we definitely worked on more than this, but I just wanted to pull out the ones that were applicable to the attendees today. We worked on some various consulting engagements, so this is more like agency specific. They reach out to us with a certain issue, control, SOP wise, etc., and then we work with them to help them get them to where they need. Internal control officer education and outreach. Last year, a lot of our time was spent providing best practices, training, developing a place where internal control officers can meet and learn. I'll talk a little bit about that later. Some of you may remember that we worked on helping agencies identify the top 5 risks for the ERM portal last year. So that was a project we worked on. We're always working on audit finding resolutions. There's always an uptick in requests from us and other agencies after the single audit's released, generally at the end of March. But we're just constantly year-round working with agencies, trying to get them to where they don't have an audit finding. We've done special reports on just upcoming things like AI, data analytics, things like that. Statewide recommendations. We try to, all the work that we do and all of our projects, come up with recommendations that we can make to the OMB, SBA, just the state as a whole. So there's been kind of statewide projects we've worked on, and I'll talk about compliance audits later. A big thing that we accomplished last year, the internal control manual. I hope you've all heard of the internal control manual. I know the internal control officers have heard of it. Technically, it's called the Uniform Compliance Guidelines of Internal Controls for State and Quasi-Agencies. So it's kind of like the Uniform Compliance Guidelines, which people refer to as the accounting manual. We also issue that. So state agencies need to follow this manual as well. It's 158 pages long. There is a lot of good information in it, and a lot of that is examples and tools that you can use. But at the end of my presentation, I'll show you that we have a website where you can kind of search through it. You don't just have to read the PDF. It's a lot easier to search that way. But it's broken down into 3 different areas. There's the internal control guidelines, discuss the theory and standards, it's like COSO standards from internal controls, the framework. Part 2, actual guidelines that you can use to evaluate and develop internal controls. And then we actually have a part 3. I like this a lot. A lot of manuals don't have this. We give you the tools to do that. Don't just throw it at you and say, go ahead and make internal controls. We give you some tools to kind of think through that process and have internal controls. I'll show you on our website where it's located, but that link on the slide, you can find the internal control manual. Here is a quote from the internal control manual. It talks about IC officers, internal control officers. It says each agency shall assign a person to the role of internal control officer as a single point of contact to facilitate and support risk management activities, including the agency risk assessment, internal control evaluation, and development. The internal control officer must have the cooperation and commitment of agency leadership, the agency department division heads, to be successful. You can find that on page 11 in the manual. I hope most agencies are aware of that requirement. So if you have not yet designated an internal control officer, or if there's been some personnel changes and you have a new one, just let us know. So we keep track of that. Try to email out like training announcements, new best practices, videos we've created. And there's also a Microsoft team where it's essentially just like a collaborative space for agencies. If you're an internal control officer last year, you're probably already invited to know about this, but we put training announcements in the team. There's different channels where like a small agency, they may have different problems than a large agency. So we've kind of made 3 different areas where you can kind of just discuss collaboratively issues that you have. And if it's all new to you, in our folder in the teams, we have all our prior training materials for the last year and just some resources that we've created. And there's even a channel to ask the SAS team a question. So if you don't want to call us, if you want to come to our office or schedule a meeting, you can just chat to us and we will respond. Probably more responsive to that from a time perspective, really. Another big project our team has worked on, and I would say this is like the bigger project that we worked on last year, was what we call the statewide receipting project. So the scope of that project was really to look at each agency and assess their receipting activity and assess the risks. When I say receipting activity, like any cash checks, other revenue coming in to that agency, what were the processes around that and controls in place? We did look at it on an agency-specific basis, but we did a combined report and gave statewide recommendations to OMB last year. And we additionally analyzed some different areas, like we looked at third-party service providers. You might, like Tyler Tech is a big one, where essentially this third party is collecting receipts on behalf of the agency. So we looked at that process and looked at the controls in place. Same thing with remote capture technology, those machines that agencies scan checks in. We looked at those and provided recommendations from an accounting and internal control perspective. And then at the end of all this, we developed some tools. IC officers probably will recognize the segregation of duties tool. Has a receipting section in there. We made a response to risk template. I'll go over that in a little bit. And in addition to that, we mapped out each agency's receipting activity in like a flow chart. Some agencies had a flow chart. We were impressed with that, but ones that did not, we went ahead and did that. I hope that's helpful. So in addition to the statewide report for receipting, there will be agency-specific reports. And I say reports, that's in quotes there at the top, really called an agency management letter. It's not a public report, it's not gonna be on our website. It's just a management letter, which will give you the results of our review. The sections in that management letter, it'll start with the summary of the receipting activity, explain what's going on, what's coming in, how much for each agency. And then there'll be an areas of concern section. So any areas that we identified from a control perspective, you don't have policies, et cetera, we noted out our areas of concern. And then following each area of concern, we'll have a recommendation that addresses each area. So it's not just like a normal audit report. We're not just writing you up or trying to tell you what we would recommend that you do to address that area of concern. The next area, you'll see, it's called control area observations, but it's essentially like a line out of Excel. We provided like a matrix to OMB of every agency, but really this is just picking out each control area that we did not see was present. Like, so for example, there's a column for like SOP and policies. If they had no policies of the receiving activity, you can expect them to X in that column. If they had internal controls in place over, the 3 areas of collecting, recording, reconciling, then you can expect a check mark, for example. So you'll see that Excel control area observation in the management letter. And at the end, we provide those tools that I referenced, the segregation of duties tool, the response to risk tool, and then the flow charts for each agency. Going more information about the management response template to the risks. I linked it here. It's on our website. It's already kind of pre-filled out for one of the risks, but this is important because It allows the agency to really respond to the risks that were identified. And from an audit perspective, it's a good tool because you're actually documenting your risk, like your response to the risk. It's not like, every year Board of Accounts is going to come in, write you up, and we're going to write you up next year for the same thing just because it's not present. And it might just be because you don't have the staff or it's just a small amount. It's not worth implementing corrective action over that one part. Well, you could use this tool and document, we are not doing anything with this risk because we have X, Y, and Z, or because it's immaterial. So that's a good tool to hand over to the external auditors and just show, yes, we consider the risk, but this is what else is in place. In that template itself, there's some responses specifically to the risk. You can just essentially accept the risk. He acknowledges that it's there, but you're maintaining it because it might be immaterial, for example. You could just avoid the risk, which you just eliminate it entirely. Example there, you could, instead of collecting cash for checks, you could just require the taxpayer to go online and pay online. You could reduce the risk by implementing controls to prevent or detect an undesirable event from happening, or you could share the risk. Just mitigating it. Maybe you could purchase some kind of insurance to just share that risk. That's all in the template. There's some additional information for you to consider to decide what you want to really do. It's really well thought out, and there's some other additional factors at the bottom, like if you say it's immaterial, kind of make you think about that and document that. The cost of any response to the risk. Should you do a cost-benefit analysis? Is it really worth it? Is it worth it to a low likelihood of occurrence? You already have controls in place. But what I think is the most important part about this template is requiring that you have a next step. So if you do respond to it and decide not to just accept it or eliminate it, what will you do next? So will you have extra steps that you're going to implement? Is it going to be a phased approach, or you just going to do one thing and then forget about it? So there's a spot there for you to document that. And then there's even a spot at the bottom to reference SOPs. So I see this as would be amazing if I was an auditor and you just hand this to me. This links to all the SOPs of the process I'm looking at and what you're doing for going forward, and you've assessed all the risks. I'd be impressed if it was all handed to me, like the first day when I asked the question. But that's more about the tool, the risk response tool, and the receiving report that will provide agencies. The segregation of duties tool, we've trained on this in the past. We have a video online on YouTube about segregation of duties, but there's the link here at the bottom of an Excel file that you could use. But generally, in an ideal world, when you have unlimited resources and perfect amount of staff, your employee duties should be separated by these 4 following areas. So a different person should generally be in charge of authorizing part of a process, keeping custody if there's assets involved, cash, inventory, whatever it may be, record keeping, and reconciliation. So those 4 areas generally be segregated. We may have a deficiency in segregation of duties. And some screenshots of what that Excel file looks like. And we use this in our audits too. You can just focus in on certain issues. So if you want to use this, you can assign your employees a number, or just type their names in and then go down and write what they actually do in their process. And just keep those 4 areas in mind, and you can visually see if you have an issue or not. We also have a section for cash disbursements, payroll, cash at the top, essentially just reconciling cash, maybe more for the comptroller's office, but preparing the CFA, financial close, and notes to the financial statement. If you find any other areas that would maybe helpful to you, please let us know. We'll happily provide more matrices to put on our website. So all that information will be included in the receiving reports, and we will be sending all those out to agencies within the next 2 weeks. If you have any questions about the letter or you want to discuss, please feel free to call, set up a meeting. We thought about scheduling next conferences, sitting down with each agency, but it's been so long and we're already into the next project. We just wanted to do this training, and we'll have a copy of this training, this recording, put put it in the email, so anyone that was not here at the training can kind of go to that part and see what was in the report, or what I explained was in the report. So earlier I mentioned that I would come back to the statewide compliance projects that we're doing. And you may remember that the external audit team, state assignments, they used to do a compliance engagement on each agency every single year. They looked at basic things like sample receipts, capital assets, disbursements, SDOs, things like that. And we kind of really rethought that process and wondered, was this really providing agencies a benefit? Was this efficient? Is there a better way to do this? So we kind of looked at that, and we're now not doing that anymore. We are taking a more holistic approach to improve accountability and efficiency. And instead of doing those compliance engagements every year, we're doing like these projects. So for example, last year we worked on receipting. This year we're going to work on reconcilements. We might do disbursements in the future, et cetera. But the reason that that's important, if you take a look at the records retention guidance, it says generally the basic accounting records, they can't be transferred to the record center until the issuance of an SBOA audit report. So those compliance reports in the past, that's usually what agencies kind of waited on to send the records over. And it does say satisfaction of any unsettled charges. This is more like at a local unit, if an official needs to repay back money to the unit. I'm not aware of any state agency that has unsettled charges. If you have any questions about that, ask us, we can ask our attorneys. But essentially, you no longer need to wait for that compliance report every year. We reached out to IR, they're going to change guidance on their website. We're going to issue a bulletin article in July to formalize it. But now the report for the retention schedule will be the state single audit report. So essentially every single year, once that gets filed at the end of March, you can check on our website to see that was filed, and then that you can go ahead and send your records. You don't have to hold those for audit. And I will show our website, show you exactly where those are if you don't want to go through the report search on our front page. But that's on the state agencies page, and there's an audit reports area that you can find the last 10 years worth of compliance reports. If you're curious where the retention schedules are, I put a link there to IR's website as well. So that's what we've worked on in the past. Is there any questions so far? Okay, going forward, this is what we're currently working on. We're working on more than this again, but this is what I pulled out because I thought it was relevant for today. Reconcilement project. I referenced this earlier. My next slide, I'll talk about that more in detail. It's kind of our big project this year. Currently working on procurement compliance, not necessarily testing contracts at each agency, but more of information gathering, getting understanding at a statewide level. We're looking into agency systems from a procurement perspective on like an agency needs a system. Are they really thinking about all the internal controls, the financial aspects that they need for implementing that system? So that's still in the information gathering phase. But another really big project, we're kind of redoing the accounting manual, SBO Uniform Compliance Guidelines, not the internal control manual, but the accounting manual. So I expect some major changes, at least from reorganizing standpoint, updating perspective. So we're working on that. And we probably met with a lot of you and those on the call about the reconcilement project already, but to break it down for those that are not aware, we're breaking it into 3 different areas. So one, we're concerned about the procedures over external bank accounts. I put external in quotes because we're concerned about the ones that are not under control of the Treasury of State. You may be surprised, but we found that some agencies have just, and for good reason, have gone out and just got a bank account to account for what they need to do. But we want to make sure there's proper procedures over those reconcilements, that the activities being reported to PeopleSoft, and that the Comptroller's Office knows about it when they file the ACFR. Second part of this project, financial systems, but financial systems in quotes, really any system that an agency would have that has financial information in it. Are they reconciling that with PeopleSoft? Are they transferring it to PeopleSoft? Is it being transferred correctly? So we're concerned about the reconciliation of systems from that perspective. And any offsite locations. Some agencies do have offsite locations, like B&B branches, for example. They have their own accounts, and we'll just be looking at the procedures that they have implemented over the reconciliation of those accounts. Some resources I'll go through real quick to respect everyone's time. We have training videos, templates, all these good things on our website. I'll show you how to better search on a resource library. Specifically, some of the things that the external audit team talked about, we have training videos over, like the compliance supplement, how to navigate it, where to find it. We have a specific one on FAFATA reporting. We're making a new one on FAFATA because you used to have to report in FSRS, and now you have to do it in SAM.gov, and it's a little different. So we're working on that. Several videos on internal control manual. If you don't want to read 158 pages, I start with videos. Segregation of duties, fraud awareness, how to create SOPs, things like that. Please do subscribe to our email list on our website. Each of our pages, or most of our pages, have that little icon in red. You can just click on that or click this link. I promise you we won't blow up your email inbox. We probably send one email quarterly, let you know the bulletin's out and the occasional statewide training like today. So real quick, I'd like to share our web page and show you the resources we have there. So you should now see our website. On the front page is where you can search for audit reports. You can navigate to this a couple of different ways. You can report fraud. You can ask us a question. I mentioned the resource library earlier. If you want to search the accounting manual or the internal control manual, like on the HTML, like from a web search, you can go to Uniform Compliance Guidelines here on the left. We have all our manuals here, even for local governments. Down at the bottom, you can hit state agencies for the accounting manual or internal control manual for the internal control manual. And this page is essentially the whole manual in HTML format. So for example, you could type in a specific search term. Probably want to be more specific than control, but then you can go through and read and use the jump to search through. So I think that's a lot easier than the PDF way. But to navigate to the state agency page, where we had all those links in my presentation, you can go to entities we examine and state agencies. You'll see Debbie's contact information there at the top. We have some basic information for taxpayers, anyone who visits this page. Where the meat of our website is the manuals. Regulatory is more for how the financial statement should be laid out, so I'll skip that one. This is the internal control manual, and this is the accounting manual. So we have it broken down in different chapters, and that's what you can search in our resource library. Examiner directives, bulletins. We started them in 2022. If you have a question on if we wrote a bulletin article on a certain topic, you can click here and look at the index, like daily deposit law. If you're looking for an article on that, you can find it in volume 9 on page 2. David talked and Jenny and then talked about compliance supplements. We try to link those here. So if you can't find it on the Fed's website or Google, find it on our website. Prior presentations and training materials. Our presentation today will be posted here. Resources. Some different tools, like I mentioned, from development or evaluation of internal controls, an SOP template, things that we've just developed over the past year or so. Some Indiana codes just for the public. And here's where you can find audit reports. So if you're looking for that single audit report that I referenced earlier that we're using for the record retention part of it, you can find them here. We'll keep the last 10 years worth of single audit reports. And comments about our staff. If you loved the external audit presentations, didn't so much like mine, feel free to say that. Any comment that you feel is appropriate. please feel free to leave us today. Is there any questions for me before Susan does some wrap up? Thanks. Okay, thanks. Yes.
Hi, my name is Susan Gordon. I'm also with the State Advisory Services team. And I'm just here to wrap up and summarize a couple of key points from today. First, I hope we made it clear that we are here to help. That's one of our goals. We all have the same goals, right, of being successful, being accountable, being transparent, efficient. So we want to help with that. So if you have questions on internal controls, you would like to get some ideas on internal controls or talk something over, if you like to talk about how to write a standard operating procedure or find something in the compliance supplement, or how to resolve an audit issue that you have, give us a call, let us know how we can help with that. The best way to contact us is on the email that's here on the screen. Just a couple of other things. As part of the State Advisory Services team, we do have one of our major objectives of offering training throughout the year. Much of our training will involve internal controls, what those are, how you develop them, document them, how you evaluate them. How do you do a risk assessment process and respond to the risks and manage risks. Those are all things that we cover in our training sessions. And some of those training sessions this year are going to be in conjunction with the workshops that Jenny alluded to earlier. We do want to hold several workshops, mostly focusing on the resolving of audit issues this year, of those things discussed today, like the FAFATA or subrecipient monitoring or period of performance. So we will be developing some working groups and having some workshops on those topics for sure. And then if you have any suggestions on other workshops or working groups that maybe we need to engage, then please let us know that. It's good to have these collaborative type sessions where we can really get, as Jenny said, into the weeds and find out what we need to do to resolve these issues and be specific in the processes that need to happen in the assignment of responsibility. So let us know. We look forward to working with everybody on that. So with that, we would like to thank you for coming today, and we look forward to working with you in the future. Please feel free to reach out to us with any questions you have.